Ladies and gentlemen, expectations for a 2023 recession are here, and they're not quite what you may have thought they would be. No, folks, this is specifically targeting one industry in particular that has just made recent headlines because you guys may have seen this, that Elon Musk has finally made good on his promise and has delivered some of the first Tesla semi, I don't know which one it is, Tesla semi trucks to now PepsiCo and Frito-Lay is utilizing these 500-mile range, 100% EV Tesla semi-trucks that are going to be these 80,000-pound monsters on the roads, 100% potentially following in Tesla's model, 100% autonomous driving semi-trucks on the road, not only taking freight and loads from point A to point B, potentially, hopefully they're safe out there, but maybe they're putting some people in dangerous situations. But even worse, they're taking jobs away because these trucks don't need people to drive them. So we're going to have to see how that plays out. But folks, I've got FreightWaves here, and it says that there's an Uber Freight expectation here of a broad-based volume recession in 2023, and this is an attack against truck drivers, folks. Truck drivers, owner-operators, even those that are company employees, W-2 drivers getting paid by the mile. Folks, this is a big deal. We need to be paying attention to this because we already had, AB5 last year in California. That was a huge hit to the trucking industry, as well as the higher diesel prices and some of these prices on these loads. And this right here specifically is targeting the spot market. It's a spot market recession is what they're calling it. I got a lot of information I want to share with you guys, so please stick with me until the end because I don't want you to miss any of it, or perhaps maybe misunderstand or misinterpret anything that I have to share with you, because I think this is all very, very important, not only to the drivers, but to everyone else as a consumer, because, between railroad freight and truck drivers, this is pretty much how our country operates. So granted, we have some shipping containers coming by sea. We have some shipping going on, some commercial freight by air. But trucking and railway freight is probably 70% of our supply chain here in the United States. And this is before we get into the possible dangerous dilemmas that we are facing with Norfolk Southern and other trains, CSX, Warren Buffett's Berkshire Hathaway, BNSF, Union Pacific. But these railway freight cars not only derailing and putting people in really sketchy situations, life and death situations, but now reports of possible foul play at hand with certain devices found on these tracks. Ladies and gentlemen, welcome back to another video. Sorry, how rude of me. Welcome back to another video. Sorry, I did not mean to be rude. My name is Kevin. If you're here for the first time, welcome. I do appreciate you stopping by. Please don't make this the last. Please subscribe. Turn on your alerts, get notifications. Please give the video a like and share this information with anyone you think it would be helpful to. A lot of helpful links in the description, free links for some helpful advice for people looking to improve their financial situation, buy gold, invest in gold and silver. If you need access to funding, free stocks, building businesses, starting YouTube channels, the list goes on and on. I've got a ton of value that I want to share with you guys, and I'm very happy for anybody who wants to take advantage of these opportunities. So last week, Uber Freight, the logistics service provider arm of Uber, New York Stock Exchange, ticker symbol Uber, UBER, issued a bearish first quarter update on global freight markets, and the capacity indices exceed demand indices in most modes of transportation. When the capacity exceeds demand, then that means that, this is the inverse of what we were experiencing before, high demand, limited supply. But now this is driving downward trends in rates that will get worse for carriers before they get better. So my immediate response reaction to that first blurb here from FreightWaves is diversity. Remember, folks, diversity, security, and cash flow. These are my three modes of financial protection, as well as I've got 5 basic principles for financial security and financial freedom, which are make more money, spend less than you make, budget, eliminate debt, save, and invest. But with my 2023 prediction of more of the same, I'm focusing heavily doubling down on diversity, security, and cash flow. And if my If my income is not diverse, for instance, if I'm a owner operator, if I'm a truck driver, and that's my only mode of income, I want to diversify my income. I want to have more than just that, especially for situations like this and projections of the market like this. And I want to make sure I have security so that the money that I do earn is safe and protected. And I want to make sure I continuously have cash flow because, you know, if you were to see a disruption in your income, or perhaps maybe an attack against your cash and your savings and your investments, then that cash flow is going to continuously keep the money rolling in so that you don't miss a beat, okay? So this, in my opinion, is the best way to protect by having these three pillars, okay? Now, it says here that in U.S. truckload, Uber Freight said that the 2022's spot market recession will transition into a broad-based volume recession. And in 2023, we're seeing that as consumers are spending begins to be felt upstream and slows down inventory replenishment and ultimately manufacturing production. So the consumer spending is pulling back. And why is this so important? I've mentioned this in previous videos, but this is going to be very, very important because the consumers are beginning to become more particular about where they spend their money. They will spend more, but ultimately the volume will be less. So you're going to have to provide the greatest amount of value in order to attract these consumers and these shoppers and their money, with higher prices not being a problem, folks. The price is not the issue, okay? It's the volume of spending that's going to be the problem. If you guys want to know more about that as a consumer, as a shopper, or as a business owner, small business owner, entrepreneur, marketing and advertising, please let me know. I don't mind sharing. I'm an open book, folks. And it says that citing FTR data, Uber Freight predicted lower truck utilization for longer, and that more capacity is on its way out of the market, because like I said, the volume is going to be reduced, but the price tags are going to be increased, which we're already seeing with retailers, specifically like Walmart. But we're going to see this widespread across the board because they realize that their customer base pool is shrinking. So in order to maintain profitability and revenues, they're going to have to drive up the prices. But if the pool shrinks and if they still have a bad taste in their mouth from overindulging through the pandemic and being inundated with surplus supply, you guys know what I'm talking about. Overstocked shelves, shipping containers in parking lots, giving product away, not accepting returns. They don't want to do that again, okay? They're not going to do it again. So it says here that if you look at 2022, we saw a recession mostly limited to the spot market. And this is from Mason Danoff, the senior economist at Uber Freight. And he spoke to FreightWaves, and he says that more volume was going from spot to contract, but the total size of the pie was unchanged. But then the entire pie was getting smaller in the second half of 2022, and several factors were driving that, starting with the inventory glut. That's what I just described and explained to you, the surplus, the overstock, the crashing wave of all this inventory coming in that had been ordered that were stuck on shipping containers while people were at home collecting unemployment checks and stimulus checks without having to go to work and buying up all these products online. Then in the third quarter, we saw a significant decrease in imports, and in Q4, a decrease in manufacturing production and personal consumption. All of that was happening when the market was still really oversupplied. Capacity remains loose, folks. And look, this is literally what's going on. I'm not going to read this whole article to you. If you want me to do a deep dive on this, just comment down below. Let me know if there's enough interest. I'll make sure to do that. But basically what this means is, and I've been telling this to a lot of folks that I've been talking to here recently, locally, around the world. I get on webinars, I get on group chats and Zooms with meetings and conferences with business owners in a variety of different industries and fields. And we've been having these conversations because, for instance, let's just say, I'll leave it at this so I'll keep this video short. Let's just say the automotive industry. We're never going to see another situation, another instance where all these automotive manufacturers, we're going to see a decline in dealerships, plain and simple. But we're never going to see a situation where we're going to see car lots full with a massive car lot with a massive supply. Now, you may see a car lot full because the car lots are getting smaller. Therefore, they don't look like they have so many open spaces. But at the end of the day, they're going to have a limited amount of vehicles. They're going to charge more for the vehicles. They're going to make the same money, if not more, through reduced volume, but higher prices, higher revenues, higher profits. And then for the most part, they're going to be made to order, pre-ordered, and or ordered online. So the volume remained the same. There was an inventory glut. There was an excess. There was a surplus in some industries, some markets, not automotive. We know what happened there. And then some of these dealerships started buying up used cars for more than new cars, and that put them in this dangerous downward death spiral that they're about to experience some serious bankruptcy and some bad debt and some write-offs on, and non-payment by these banks about to feel that pain. But this will be passed on to the consumer. Trust me on that one. It will be passed on to the consumer. You guys will feel it. The average price of a new car is going up through the roof. It's just going to become more and more expensive. And then to operate these vehicles with routine maintenance and fuel and electricity prices are on the rise per kilowatt hour. They're going to get that money back. But what will happen is we're never going to see an instance where they're oversupplying. They're going to get this down to not even just a just-in-time inventory system. This is going to be basically a made-to-order, pre-order system, and you're going to pay through the nose used, or you're going to pay a higher premium with a possible additional dealer markup, ADM, on top of it, and then you're going to wait for it to show up after you've ordered it 6, 12, 18, 24 months later. If the supply chain can improve, maybe you'll get it faster, but we're not going to see what we saw 3 years ago and before that ever again, in my opinion. And with that, it hits the suppliers and the shippers because the volume will be decreased. You see what I'm saying? I hope that makes sense, folks. I hope I didn't oversimplify and leave too much of the juicy bits out of that for you guys. But if I did, I apologize. I'm not trying to be rude. I just want to get this information to you quickly. If you got any questions, feel free to drop a comment down below. Let me know. And again, there's free links in the description for anybody who wants more information. Until next time, folks, you guys take care. Be safe. I'll see you real soon.